Matt from the Trade Brigade here doing a technical analysis on ticker symbol NIO for NIO Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it just the other day, and obviously the chart got hammered on today's session. Did you laugh? Well, hopefully you did. If you know anything about technical analysis, obviously we have two back-to-back hammers here on the daily time frame. So no pun intended, certainly the buyers are stepping up at this nuanced area of support. Don't get me wrong, a lot of it probably did have to do with sympathy from the FOMC rally that we saw in the broader marketplace here into the afternoon. Regardless, buyers stepping up, we're at support. It's still looking like we could potentially get a reversal for a move back higher into this critical area at 35. Now, there is some significant work that needs to be done first, but that would ultimately be the target here based on the daily. Let's take a closer look at the 30-minute intraday time frame just to get a sense for where we're kind of at and what the potential setup would be. Let's actually take out the fibs. We'll do this first, then we'll talk more nuance in terms of levels and potential breakouts. What I want to illustrate by doing this is if you look at the down move, right? Obviously, we know that you should resist at the 38.2. That's always the first level. You know, we did pull back off of it, but then we broke, and then we broke the 50%, and we closed right on the 61.8. As we know, more aggressive, activity for a 100% retracement is likely on candle closes above the 61.8, and that's exactly what we're getting in the post market, currently trading 31.40 by 31.45. So really, kind of up in this area here, actually inside of the range from Tuesday that was as well. So as of right now, I would sort of, be patient in this setup. I don't think it's just a buy it right on the open type trade here. I think the breakout level, as we mentioned in yesterday's video, is still here at 32.34, noting that we have a gap overhead. It's no longer really about this level anymore at the 32 even, right? So let's go ahead and remove that. It's kind of like today's high of day. If we can start getting, from here, higher lows, something like this, again, the breakout point still hasn't changed. It's 32.34 to get us into 33.20. And then after that, that's really how we unlock 35. Just noting that that's the gap fill area. It's also the low end of this sort of 5-day range from right here. So I do expect a significant amount of resistance at the 33.20. But if the market's truly strong, if the broader market is obviously screaming to the upside as well tomorrow, then look for that 35 to potentially be on the table for a larger breakout to the upside. That's really what I'm seeing in NIO as of right now. Again, from a Fibonacci perspective, from an opening higher perspective, it just looks like, the potential for a breakout up and over this level will be there on tomorrow's session. So those are the levels, those are the numbers, those are the setups. Anything that's back down inside of this range, I would just watch out for chop, noting that we are technically in a downtrend on the daily over here. You don't want to fight that too hard, so always wait for that extra piece of confirmation when you are bucking the overall major daily downtrend. So that's going to wrap up the video. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.